Hey guys, this is Scott Horne with the Owner Finance Network. As briefly as I can, I'm just going to talk a little bit about selling mortgages. And I think it's a great strategy to learn. I think it's a great way to create opportunity and to 2x, 3x your profits out there. If you like the video, guys, please take a minute and like it. Comment below. We'll do our best to get back to you. And take the time to go join our YouTube channel as well, please. Now, note sales is one thing I learned, 30 years ago somehow. I wish I could say that I somehow had this strategy in mind. Absolutely not. It was just kind of something that popped up, and we learned real quick it was the way to cut out all the middlemen. Oftentimes you can cut out the realtors, you cut out the mortgage companies, and sometimes you cut out the title companies. And again, by eliminating all those kind of things helps you make more money along the way. So just briefly, what is the sale of a mortgage? So first off, you have to have a mortgage to sale. You have to create that mortgage. And maybe you go out and you buy a property, you use capital to purchase it with, either your cash, whether it's a bank loan, whether it's a mortgage loan, and hopefully it's going to be something in the 70-75% range. You then sell that property with financing and you create a new wraparound note and deed of trust on the property. So for instance, we sell most of our homes for anywhere from 104 to 110 cents over the after repaired value of the property. And we're getting a down payment, hopefully somewhere close to 10%, so that the borrower's loan is about what the house is worth today. Now, that borrower is going to pay an interest rate, 8, 9, 10%, whatever might work for that particular deal, for the marketplace we're in, et cetera. And we take the money that that buyer is paying us, their principal and interest, and I like to apply it all to my mortgage loan, my bank loan, to hyper accelerate it. Because when you learn to play that game where you're having a lower interest rate on your underlying debt, higher interest rate on your above, the equity gap grows very rapidly. So when you do this, you have to understand that a mortgage is a marketable commodity under the UCC code. If you own a homestead, I can almost guarantee you the mortgage company that you closed with is not your mortgage company today. They sold that mortgage the day after closing, a few days after closing. In fact, whoever bought your mortgage may have sold it again and again and again. Heck, my last home changed hands 5 times in the first 30 or 60 days. It was nuts. But those kind of things happen out there. And it's a common place that occurs. And we call it the secondary marketplace. We sell this owner finance mortgage into the secondary marketplace. And the investors who buy this may be individual investors who are looking to buy something into their IRA possibly, or they just buy this as an investment strategy. There are corporate entities out there that buy these professionally. A lot of banks buy mortgages. So instead of lending money, they buy the mortgage. Why? Because less issues, requirements, and they oftentimes get a higher interest rate. When you're selling a mortgage, the note buyer, as we call it, is usually looking for a particular return. What is that return? 8%, 10, 12, something higher? Every deal is different. And every transaction you do is different because they're going to look at everything from the transaction on its whole, such as what is the value of the home today? What is the borrower's overall note balance? What is their interest rate? What is their pay history? Have they made payments on time? And things of that nature. And then they'll make you an offer to buy it based on what their needs are. And those needs are across the board and what they're seeking. There are several strategies of selling notes. You can sell the whole note, meaning you sell the entire thing for X amount of dollars. Great. Whatever you get from that closing, after you pay off any mortgage you might have, goes in your pocket. You can sell a partial, meaning you can sell a certain number of payments. You can sell the next 60 payments, 120 payments, 180 payments. And after those payments are made, you get it back. And there are various ways to look at it that way. Another way to do it is you can break up that owner finance mortgage to a first and a second lien. Obviously, you've heard about buying houses where a mortgage company, maybe you have a first lien lender and a second lien lender, And you would do that so you wouldn't have mortgage insurance. Well, you can do the same thing with an owner finance transaction, where maybe you do an 80% first and a 20% second, or a 70% first and a 30% second, whatever it might look like. Maybe you have a higher interest rate on the first lien and a lower interest rate on the second lien. That might make that mortgage more marketable. That allows you to sell it, pay off your debt, hopefully all of your debt, which would be required, and you keep that 20 or 30% as kind of sort of an annuity out there. And then you stay on top of that, track it. And guys, if you do that game and your buyer defaults, you need to make sure you are making that first lien payment to your note buyer and foreclose on your second lien, get that house back and go resell it again and do another wrap note. Season it out, sell the note again. So all types of little games you can play with a note marketplace. Learning how to bifurcate a loan is a great way to look at things. I'm not a huge fan of selling partials for many reasons. Because of the house defaults, it's gone, you don't get anything else. But I think one of the smartest ways to play the real estate investment game today is learning how to buy properties, sell homes with seller financing, pay your debt down, keep some houses in portfolio, sell others. And when you do this and run numbers, I can almost guarantee you that over a basic fix or flip, you're able to 2x, 3x, 4x the profit you would make in regards to a standard fix and flip. And there is no way to take that profit and make that kind of money in a 1 or a 2 year time span before you sell that note. So guys, I know this was short and sweet about note sales. Hope you found the video helpful at least. Take a minute and like it, please, for us. Make any comments below. Come over and join our YouTube channel, and we'll see you guys next time.